This is Gary Davidson, and this is the Castle Law Podcast, where we're here to provide a business worth owning, a life worth living, and a legacy worth leaving. Today I have Ron Plonis here with me, and Ron has been a very, very good friend, a great client for me about 15, 20 years ago. We actually almost didn't get started as clients.
That's a funny story.
And attorneys, and a relationship when you came in and met me at my office in downtown Joliet.
Yeah. Was it your partner Miles at the time?
Yeah,
It was
God rest his soul.
Yeah, us three met, and my business model, I think at the time, was wholesaling, right?
Yep.
And now Miles got hung up on how that worked in terms of transfer taxes, nevertheless.
Yeah.
And saw it as a way to skirt transfer taxes, but that's not what...
That's not what we were doing.
Yeah.
Miles was a traditionalist, and he saw things in a very, very black and white way, and he had a particular way of going about things. But ultimately, he once we got him to understand what we were doing, which was traditionally buying and flipping properties, there was really no issue.
Right.
So Ron has recently done a career shift a little bit. He's still in real estate, but not flipping homes like he used to as much. And he has, gotten involved in this emerging market that Chicago is very, very, very hot and very, very unique. In an industry that a lot of people don't know about, a lot of my clients don't know about, but it's one that really provides a huge opportunity for people to actually be able to scale their business, to be able to minimize their risk, and more importantly, be able to maximize their return. So, what is this emerging market that you're involved in now?
Well, I work for Kiser Group now. We specialize solely on investor services for middle market apartments. So we're not talking about the 300-unit beautiful glass building with the pools and all the amenities downtown, and we're not talking about, the 3 or 2 unit or the 4 unit in a neighborhood where you want a house hack and live in it. We're talking typically, 12 to 20 units on the bottom end and up to, sales prices in the 30 to 40 million. So it's really middle market. So it's an emerging market in Chicago and actually nationwide, but Chicago is one of the top 10 markets. Multi-unit demand is not being met. That's just the bottom line. There's more demand for the product than exists. So that, like housing, is a requirement.
So when you have a finite amount of product, when you have scarcity, that creates demand, and obviously that's a good market to get into. When I called you up and said, "Hey, would you mind coming in?" I had to tell this story because there's a particular friend that is a friend of both Ron and I, and they said to me, why does everybody always refer to Ron as a really smart guy? Like, what is this insecurity? Like, everything always predicates. But you know what? Ron is a pretty smart guy, and I actually enjoy following your career and following what you're doing now, because I know that if this is something that Ron's considered and thought about and gotten involved in, that's a place that my clients need to consider.
Yeah, and I don't know about the smart part. We'll let people who meet me judge that. But in my career, I flipped a lot of houses. We held hundreds of rentals and held a lot of multifamily units. And what really helped the flipping and the holding of the single family was the top line prices were stable, but we were able to buy at a discount. But what we've seen over the last 3 years is that Chicago hasn't seen a high growth in this demographic, in this MSA, for top line growth, but the acquisition price of all these properties has gone up. There's a lot of competition. There's a lot of real estate clubs. There's a lot of HGTV graduates, and it's driving up the price
for the single family.
And then in this next case, in the construction cost, there's so much demand with all the cranes you see and all the construction that construction costs have gone up, but the top line hasn't gone up.
So let me just, because
Sure.
You said a lot in just a very little. So single family homes, the costs to acquire, to rehab, all have increased.
Correct.
But the top line cost to sell, or the values have not correspondingly increased.
Right, and then flipping the values mean how much you're going to make as a profit. And unfortunately, when you're holding them as a rental portfolio, the top line value also is a limit on how much capital you can borrow, i.e., how much capital or cash on cash return you have. So
there's pressure.
So there's pressure, yeah, and you could see, but in this time where there hasn't been top line growth in the price of single family homes or doors, there has been top line growth in a per door basis on multifamily in Chicago.
So multifamily
so the spread
values continue to trend up.
Correct. Right, because there's more demand. There's a demographic shift. Younger people, there's no stigma on renting. There's no when you and I were younger, you're younger than me, renting was just a means to an end. The ultimate goal was to own a home. Now with, you're Ubering to drive, you're getting Postmates for your food. Everything's a service society that's crept into housing. So renting a nice place or renting a house and not having the risk of if the market's going to go up or down is a benefit. So there's been more demand in rent than there has been in housing. So the price pressures goes up.
And what's so great or what's so unique about this middle market? You said 30 to 40 million, and what the doors were 20 to 50, or
yeah, the doors are going to be just like a house is going to be demographic based. So you're going to be at a micro market or a sub market. Zip code area is going to give your door price. It's going to be how much rent. It all translates that. But the middle market is basically not your mom and pop 4-unit, but also not some 200-unit complex that was built in 2005 trading between two Wall Street funds. Mm-hmm. We're right in the middle. Operators that have amassed, holdings between, 1 and 30 million, and they may have 1 or 20 buildings. So that's really what the middle market space is.
And so I'm going to challenge you with something. I'm sure, you'll be able to tackle it. Is, for those clients that I might have that have units between, let's say, that 20 and 50 unit space, because there's been a and maybe they're getting toward their end of their career, right, they want to sell out of it. What do you say to them? Is now a good time? Can they do a 1031? What can you do uniquely for them to kind of maximize the fact that we're seeing that trend upward in that market?
Yeah, we're still seeing the trend upward. So income properties like multi-units are measured in cap rate. So that's basically what's the return on the total capital invested in that project. I don't want to get into it too technically here. But cap rates right now are at not an all-time high, but a high since 2012 when the recovery began. And on the next 5-year trend, there is a small uptick in 2020 forecast, and this is Cook County and Southwest, so it's part of Will. But it looks like they're going to level off or decline very slightly over the next 5 years. So right now is the top of the market. So if you own something, it's a good time to hold because the 5-year trend is it's going to there. If you want to sell something, it's probably not a better time because there's not a forecast that it's going to go up. So we may be at the top of the market. And I don't want to say that inferring that sell now because the market's about to bottom out, because the demographic trends and math in this town say that there's still going to be demand because people need a place to live. It's not a discretionary expense.
Sometimes it's a self-fulfilling prophecy. I mean, you and I can tease, I think we both have kind of similar philosophies on some of the inefficiencies of government, but, and certainly Illinois' lost population. But what I tell people is that Illinois, and specifically Chicago, if you go to Beijing, China, Joliet, Illinois is on the map there because it's the only place in the continental United States where you can get 1 day through over-the-road trucking. It's the only place in the continental United States where every major railroad stubs. And it's the only place in the continental United States where you have water. You have the Mississippi River and you have the Great Lakes. So there's a reason why places like Amazon and all of these large companies are locating here, because from a logistics perspective, it's an ease to transport that product throughout the United States. If you have a factory or a warehouse in New York and it has to go to San Francisco, that's a long drive. But if you're locating things and you're bringing in those cargo containers up the Mississippi River, down Lake Michigan, through rail, Illinois is a good location. So despite the fact that maybe our politicians have done everything in their possible power to drive people out of the state, there's still going to be a lot of pressure for population growth and people to locate here because the jobs are here and it makes sense for business to be here.
Yeah, you hit it right on the head at the end. It's all workforce housing, especially down, you're referring to the intermodal down in Joliet. There's a huge demand and not a lot of multifamily housing on the books down there, and there's a huge demand. But that's it. It's no matter the people that are moving out. I don't know exactly what the demographic shift is, but there's employment growth, and there's still household formation growth, and that's what drives housing, not people fleeing for tax reasons. Because the people, in large part, fleeing for tax reasons, it's a domicile move, meaning that their business is still staying here, and their employees are still staying here, but they're living in Sarasota for 6 months and a day to avoid Illinois taxes.
That is on Gary Davidson's plan. Maybe not the immediate future, but I'm working on it.
I think it's on everybody's plan. Just anytime you have Florida in your plan, it's usually a good thing.
Exactly. So, Ron, what specifically for my clients can you provide? What is it of value that you are doing at Kiser Group where my clients should be reaching out to you?
Well, I mean, it's really just insight and experience. I mean, any number of your clients, they're either going to be buying, selling, or holding. I'm looking to build relationships to just be there when that buy, sell is happening, or if they need to be connected with the right lender for their portfolio. I have a lot of experience. As I said, I held a lot of single-family homes. I held a lot of apartments. And I think anybody in that place right now where they're deciding, should I buy 20 houses or should I buy apartment buildings or should I convert my houses to apartment buildings, and or is entering a program where they promote rental housing, I can offer insights about how to really measure those, because they're really two different categories. And a lot of times when you have all this pressure we talked about earlier in the conversation about top line single family home prices not rising, but acquisition and renovation costs are rising, people tend to stretch what the returns are going to be, and they're using methods that work in multi and income properties but don't work in single family homes. And I have firsthand experience actually living through that process.
So you'll provide people with consulting, you'll help them or have someone in your group help them acquire, you'll list, you're an agent.
Yeah, it's like your business. You build relationships, right? You don't go knocking on a door. Are you selling your building? Are you selling your building? It's not. I want to add value to people who are in the real estate investment space, single family or multi. And when it comes time, if they need help in a multifamily transaction, I'm there as a trusted advisor.
And I work with thousands of agents, thousands of people in the industry. And, you know, what really distinguishes you in my mind is that you've walked the walk. You've done the investments. You've experienced successes. You've experienced failures. You've made mistakes, and you've made great business decisions. And those experiences collectively allow you to provide that client with the edge. And in our industry, that's really what people need. That's what they're looking for, is they need an edge. Buying and selling real estate, whether you're buying the Willis Tower or whether you're buying a property in Dalton, Illinois, is not a novel concept. Most people have thought about this, but for someone like you who has that deep experience, that knows what a cap rate is, knows what it means, not just be able to explain it because you read it in a textbook, but you've actually lived it.
Right. Yeah, it's I do have I don't have deep broker experience, but I'm involved in hundreds of transactions. But I've also operated, capitalized, and managed a lot of rental units. So I think it will help. They're certainly going to help form the relationships. And then on the brokerage side, I'm with Kiser Group, and there's just some, you could check us out online. We're very deep experience and very laser focused on the middle market. So,
well, I know
it's a good fit.
I've had an awesome experience with you. You've not only been a client, but you've become a very, very close friend of mine. We shared a lot of yucks.
Yeah.
And I know, helped each other tremendously. So that's what it's all about in our business, is providing that excessive value, providing that go-giver mentality, being able to offer yourself up and help people and lift people up rather than simply shaking your cup and asking for a handout. You actually go out and provide people with that hand up.
Yeah, well, I appreciate you noticing that.
So this is Gary Davidson. This is the Castle Law Podcast, where we are here to help you create that business worth owning, that life worth living, and that legacy worth living.